Hi, you're watching Investor Insights, and in this video I want to talk about egos and investing and trading. Basically it comes down to this. There's no room for huge egos when it comes to investing or trading. Nobody is bigger than the market itself. If you want to have a fight with a stock market or a bond market or the currency market, I can guarantee you one thing. You're going to get chewed up, spat out, and you're going to be stepped on. You may think that you're right, but the market, it doesn't matter what happens to you, the market will keep on going. There's a lot of forces at work driving a stock market. It doesn't matter if it's intrinsic, whether it be good company growth prospects, a good economy, a good GDP, low inflation, population explosion, and you've got extrinsic factors. You've got things like external stimulus, i.e. the Fed's quantitative easing measures. That's lifting up all markets. And I'm sure you've heard the saying, don't fight the Fed. Well, if you short the market and it keeps on going up, you're going to get crushed. It's best to leave your ego at the door, just like at the gym, because if you try and tackle something that you can't handle, you're going to find it very hard to let go of positions simply because they may have moved against you. Your mentality is such that you're right and that everybody else is wrong. So in time, you're going to be proven right. That may or may not be true. But you're going to get destroyed. Your capital base is going to be totally eroded away through just this stubbornness in your belief that whatever you're doing is right and everybody else is wrong. And the sad thing is, that mentality, that huge ego effect has happened to all of us. Oh, myself included. It happens all the time still. But you learn to control it, because with experience you learn to cut your losses short. I find that suffering some big losses really sets you back, makes you more humble, and you learn that you are not bigger than the market itself. This is a very subjective insight. I'm sure there are people out there who are very successful traders who have huge egos, but in my experience I haven't met one yet. The best traders are those who are very humble in nature. They appreciate profits when they arrive. They're happy taking them when they do appear, and when they're wrong, they're willing to admit that they're wrong and to move on. Huge egos don't allow for that. Huge egos lead to huge losses. And what's possibly worse is that huge egos don't really learn from their mistakes, and they just recycle the same mentality over and over again. They make the same mistake over and over again, and at the end, trading becomes speculating. You don't want to do that. So next time you trade, or you make a large investing decision, make sure to leave your ego at the door and think about the consequences of what you're about to do, and make sure to take your profits when you see them and cut your losses short.